What's good, YouTube? Welcome to the first episode on High Flyer Network. First, I just want to take a second to thank everybody that's tuning in right now. This has been something I wanted to do for a really long time. I've been studying the stock market for about 2 years now, just trying to soak up as much knowledge as I can to really figure this thing out because I really feel like the stock market is what's been missing in the Black community. I saw this article on Black Enterprise Network that said that the Black community has about $2 trillion in spending power. And that really made me think, how do we have all this spending power and we don't have any wealth? And it's because we don't own anything. You know, we spend all our hard-earned money on these companies and these corporations and we make them richer and help them grow, but we don't get to participate in their success. And that's what the stock market does. It allows you the chance to get a piece of ownership of the companies that are essential to the global economy and to participate in the success of their growth. So I'm calling this series Bird's Eye View because I feel like to be a successful investor, you have to be able to zoom out and look at the entire horizon to see how all the pieces fit together. And then you can start zooming in and narrowing your focus to see how you can take advantage with the resources that you have. So before we get started, a quick disclaimer. This content is to be used for informational and educational purposes only. These are not formal investment recommendations. These are my opinions on what I see in the market and what I'm doing with my own money. Please do your own research and only make investment decisions based on your personal circumstances. So without further ado, let's jump into it. As I said, it's best to start with a wide view. So let's talk about what's been affecting the world the most recently. And I think the best place to start is tariffs. So we've been hearing this word a million times over the past few months and the past few weeks. So I thought it would be good to give a brief overview of what tariffs are and how they affect consumers, and then talk about how they're affecting the stock market. So essentially, a tariff is a tax on imported goods from another country. Now, what you have to remember is that in a capitalist society, companies are not responsible for keeping costs low for consumers. They're responsible for keeping their profit margins high for their investors and their shareholders. So if a company has to pay $120 for an item that used to cost $100, they're not going to keep selling it for $100. They're going to sell it for $120 or more to keep their profit margins higher and growing. So what that means is that the cost of tariffs never goes to the company because they have the freedom to raise prices. The cost always affects the consumer. Now, specifically, what tariffs did Trump put in place? On April 2nd, what Trump called Liberation Day, he put in crazy numbers on tariffs of countries around the world. Looking back, at the time, tariffs on China went up to 70%. Tariffs on the EU, which is the European Union, went up to 20%. Vietnam, 46%. Taiwan, 32%. And Japan, 24%, and a whole bunch of others. Now, just to talk about how that affects the stock market and these companies, I looked up how much of our goods that we consume are imported from other countries, and it was crazy. So consumer electronics, that's tablets, iPhones, smartphones, all that stuff, 80 to 90% are imported from other countries. Apparel and clothing, about 95 to 98% are imported from other countries. 40 to 45% of automobiles and automobile parts are imported from other countries. Pharmaceuticals, 40% of finished drugs and 80% of active ingredients are imported from other countries. 15 to 20% of food consumed in the U.S. comes from other countries. That is a lot of goods that we spend our money on, and that would significantly increase the cost for us, which is why people are scared that a recession is going to happen. Now, that's not to be doom and gloom. That's just to tell you where we started. So that's where we were. Where are we right now? Now, on April 9th, Trump announced a 90-day pause on all tariffs above 10% except for China. So all those big numbers I just read to you, instead, now there's only a 10% baseline tariff on all countries, which essentially means that all goods from around the world will be 10% more expensive, except from China, which now they are currently at 125% tariffs, which is still crazy. But yesterday, Trump announced an additional exemption on all consumer electronics that come from China. That, again, is tablets, computers, smartphones, chips, and semiconductors, which is huge. I'll get back into that later. But so him putting a pause could be a big spike for the stock market. When there's a lot of uncertainty in the stock market, prices do not go up because people are scared. Nobody wants to put new money in. And right now, all the smart money is sitting on the sidelines, waiting to see what Trump is going to do. But with the recent announcement yesterday of him putting a pause on, all tariffs over 10% and putting an exemption on goods imported from China of all electronics, that's huge because the largest sector in the stock market right now is tech. If you put an exemption on all those tariffs from China, that means they won't be affected by the huge 125% tariffs. So tech companies could get a nice boost in the market coming up this week. So that's something to pay attention to. Next, let's talk about earnings season. So earnings season just kicked off on Friday, and essentially earnings season is probably one of the most important times in the stock market. An earnings report is like a report card for a company. Companies that are publicly traded are legally required by the SEC or the Securities and Exchange Commission to report how much money they're making and how healthy their company is. So that means anybody can go access and see how well a company is performing for free. All you have to do is search a company's name and earnings report, and you can put in Q1 or whatever quarter, and it will show you for free how to see how this company is performing. You should not be investing in any company until you see a company's earnings report. So just keep that in mind. Now, Friday, as I said, earnings season kicked off. We had reports from JPMorgan, which is the largest consumer bank in the world, BlackRock, which is the largest asset manager in the world, and Wells Fargo. Now, for the sake of time, I'm not going to go in depth about specific metrics for each of those companies, but I did listen to JP Morgan's earnings call, and I listened to the commentary by Jamie Dimon, who is the CEO of JP Morgan. If you don't know who Jamie Dimon is, look him up. Whenever he talks, people listen, so you should be tuning into everything he says, because he really gives some insight into how he sees where the economy is going. And I pulled out some things that I thought was really interesting that he said. He basically said that there is a high risk for a recession right now. Low income tax brackets will be hit the hardest. Companies are halting their growth plans because they think costs are going to go up. And consumers are buying things in bulk right now because they think costs are going to go up. So what you should take away is that there's a lot of uncertainty, that the stock market will probably not shoot back up immediately. It might trade sideways, which means it goes up and down, but it doesn't really keep going higher for a while. So just keep that in mind. But that is a good thing for investors looking to get started, because as long as the stock market is not shooting up and stocks are at very low prices, it's a great time to buy. You can purchase the best companies in the world at very cheap prices. If I told you you could get a Birkin bag for $200, you would jump on it, because if you can spend $200 versus $1,000 for something, why wouldn't you hop on it? If I told you you could get some Amiris for $50 instead of a couple hundred, you would probably hop on it. You should have the same mindset with stocks. So just keep that in mind. All right, let's talk about the earnings that we have coming up this week. So let's see. On Monday, we have Goldman Sachs. I'll be very interested to see what they have to say. Tuesday, we have Bank of America, Citigroup, and PNC. So basically, Monday and Tuesday, we see the roundoff of the bank earnings. I'd be very interested to see how their commentary pairs up with Jamie Dimon's at JP Morgan. Banks always give good commentary on what they see from consumers. So if you want to see how the economy will be affected, listen to these companies and what they have to say. Like I said, accessing their earnings reports are free, and you can also listen to the earnings call for free. If you don't want to sit and listen to an hour-long call, that's fine. But definitely look up their earnings reports just to see how they're thinking about the economy. Wednesday, we have ASML and Abbott Laboratories. ASML is a very important company. They are the only company that makes the machines that create semiconductors. Semiconductors are the chips that power all of our electronics, from smartphones, computers, data centers, and AI, everything. So they're a very important company. And Abbott Laboratories is a large pharmaceutical company, so I'll be interested to see what they have to say as well. And Thursday, I'm saying it right now, you heard it here first. Put Thursday on your calendar. It is a heavy hitter day for earnings announcements. We have Taiwan Semiconductor, which is one of my stock picks. Huge company, and probably, in my opinion, the most important company in the world right now because of AI and where the world is going for in regards to AI. So definitely tune into that. We also have Netflix. Netflix is also one of my stock picks. They've been killing it lately. Their revenue numbers have been going crazy. They've had a lot of big announcements, and I see a lot of growth in the content that they produce. So definitely tap into Netflix. And American Express. American Express, we all know, they have the credit cards. That would be a very interesting earnings report to see how they think about consumer spending. When you see consumer spending slowing, that is because consumers are nervous and they don't have the money to spend on these higher prices, which means the economy could slow down. It's very important to see what they have to say and how they see consumer spending. If they see a spike in consumer spending for this short-term period, as Jamie Dimon said, he saw some front-loading, people balking up on items. So that could mean that their revenue, their earnings report for the second quarter, which is April to June, could also be spiked up. So that's something to consider. So tune into all of these this week. Keep an eye out and just see what these companies have to say. All right, now let's get into some tips for new investors. If you're just getting started and you've never put money in the stock market before, here are 4 ways that you can get started right now. So first, I want you to come up with a goal. I want you to think about where you see your life in 5 years, 10 years, 20 years. What do you want your lifestyle to look like? Once you come up with that vision and that number, then you can start putting things in place to help you achieve that goal. Number 2, I want you to create a plan. I want you to start by thinking of a percentage of your monthly income, not your gross, but your net monthly income, what you actually see on your paycheck, that you will invest every single month like clockwork. Because what that does is it lets you get some skin in the game and see how your money actually moves in correlation to the stock market and get comfortable seeing the ups and the downs. And I would say choose a percentage that doesn't put your current financial situation at risk. Invest money that you don't need right now, that you won't touch, and start with that. Third, I want you to look up some brokerage accounts. A brokerage account is essentially an account that stores your money and allows you to invest in stocks. You cannot invest in stocks through your regular bank account. You have to create a brokerage account. There are a whole bunch you can choose from, and they each have their own pros and cons. So I want you to start doing some research on which accounts that you feel are best for you and start thinking about which one you might select. I'm going to do another video where I break down certain ones that I think would be good for different types of investors, and I'll go in more depth there. And lastly, I want you to stay consistent. Once you create a plan, once you determine how much you're going to invest every month, do it consistently. That is how you grow your account. That is how you compound your money over time. And that is how you build wealth for yourself. Lastly, let's get into my stock picks. 5 companies I think will do extremely well over the next 5 years because they're essential to the global economy and that I think you should consider for your portfolio. So starting off, number 1 is NVIDIA. NVIDIA is one of the most important companies in the world. They are a semiconductor company and they create GPUs, which stands for graphics processing units. These chips are what power all AI applications. Think about your ChatGPT, your Claude, your Llama. They are essential to the future of AI. AI is not going anywhere. They are years ahead of their competitors and they have a 40% profit margin, which means for every dollar they make, they get to keep 40 cents of it. Any company that has at least 20% profit margins is doing very well, and NVIDIA makes 40%. So this company should be on your radar. They are one of the most important companies to the future of the AI race, which is not stopping. Number 2 is Taiwan Semiconductor, ticker TSM. Taiwan Semiconductor manufactures the chips that are used for AI and every other piece of technology that we have. They manufacture chips for data centers, smartphones, tablets, laptops, everything. Taiwan Semiconductor manufactures 92% of all chips around the world. I'm going to say that one more time. Taiwan Semiconductor manufactures 92% of all chips made around the world. They essentially have a monopoly. With the AI race to continue to grow how powerful AI becomes, you need more chips. When you need more chips, you have to make more chips. Taiwan Semiconductor will be making those chips. They just opened a new factory in Arizona, which means they'll be manufacturing chips for American companies right here in the U.S. that will double their production, and I think they will do extremely well this week, especially with earnings coming up. Keep your eye on Taiwan Semiconductor. Number 3 is Meta. Meta is the company behind Instagram and Facebook. I want you to take a second and think about what are the 5 most used apps around the world. Those 5 apps are YouTube, which is owned by Google, TikTok, of course, Instagram, Facebook, and WhatsApp. Meta owns 3 of those. Meta owns Instagram, Facebook, and WhatsApp, which means they have some of the most eyes around the world on their platform. Now, when you think about advertisement, companies aren't putting as many ads on live TV anymore because our generation doesn't watch live TV. What do we watch? Social media. So companies are paying Meta to include ads on their platform, which means they're raking in big money from these large corporations and from ad revenue. Meta has 35% profit margins. People are not going to stop using Instagram. It's too essential to our way of life. Meta should be on your list because it's essential to the way that we currently live. Number 4 is Netflix. Netflix is probably the most successful streaming company that we've seen to date. We've seen them, all of their original productions. They've gone from just including other movies to and shows to creating their own movies and shows, which have been extremely successful. We've seen them feature the Jake Paul and Mike Tyson fight. However you feel about that fight and what you thought the results were, it was the most streamed event in history live. Netflix also featured the Christmas games. And there's talks about them including NBA games during the playoffs as well. Netflix is going to continue to grow over time. I think Netflix should be considered in your portfolio. And lastly, Amazon. Amazon used to be my favorite stock, but with the recent tariffs and stuff, I'm a little bit more cautious on them right now. But Amazon is an e-commerce giant. We order from Amazon because we know we're going to get it in a day. That puts them over companies like FedEx and UPS, but it also puts them over companies like Walmart, Target, Costco, things like that, because we can order everything that they sell and get it to our doorstep in a day without ever having to leave our house. Additionally, Amazon is also a huge tech company because they have the largest cloud computing software. When you think about things that you save to the cloud, it's not just floating around in the air, it's saved on a data center. Amazon has the largest cloud computing software. That puts them ahead of Microsoft and Google. Amazon is a behemoth. They're not going anywhere. They made $50 billion in profit last year, and it's probably going to increase. We have to monitor the tariff situation, but Amazon is not going anywhere. Keep Amazon in your portfolio. And these are my 5 companies that I think will do extremely well in the stock market over the next few years. Consider these for your portfolio, and let's make some money. Thank you so much for tuning in. If you made it to the end of this video, you've already accelerated your journey to financial freedom. Please make sure you subscribe to the channel and hit that bell so you never miss a video. I'll be dropping videos just like this one every Sunday. Also, please drop a like. It helps me grow the channel and it helps with the YouTube algorithm. If you have any questions about anything I discussed in this video or just general questions about the stock market, please drop them in the comments. I will be responding to everybody's comments. And also, if you have anything that you think I missed or that I should put in the video next week, please drop that in the comments as well. Also, feel free to DM me at High Flyer Network. Again, thank y'all so much for tuning in. Stay informed, spread some love, and I'll see you at the top. I'll catch y'all next time. Peace.